Mortgage rates are the highest they've been in about 3 months, and it looks like they're going even higher today. But if history repeats itself, this week should be the highest we're going to see mortgage rates for the rest of the year, and I'll show you why. Even with rates climbing, we saw a huge jump in pending sales this week, not only nationally, but also in our local markets. And for the first time, we officially have more sales pending than we did in both 2023 and 2022. So housing sales are finally growing. However, thanks to these climbing rates, we saw a big drop in the number of people applying for mortgages this week. After a negative print last week, housing inventory has continued climbing this week. And last but not least, the new housing starts data is out and it's not looking good. We're covering all this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy or sell here in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that is in the description below. Okay, today is October 21st. Let's see what the data is telling us. And if this is an old video, you can click the playlist here and it'll take you to the latest weekly market update. First up is market news. So last month's census data is out for residential new construction permits, and it's very clear that builders are still not happy with where mortgage rates are, and they're pulling less and less new permits. This is the chart. Here's what you need to know about it. So the blue lines, that's permits and starts. You can see they were very high up in 2021. Rates were very low then. Builders were very excited to build more. And this includes not just single family, but also multifamily apartment buildings. So they were taking advantage of all the low rates as well. And then the completions, you can see that line has been going up and up. What we're seeing completed today is the permits that were pulled way back here. And as you can see, when rates started to climb, builders were pulling less and less permits and starting less and less new housing developments. So again, see up here, tons of permits being pulled, but there was not a lot of completions then. Today we're seeing the completions from here, which means moving forward, now that permits and starts have been trending down for years, these completions are going to come back down, which means less and less housing inventory coming onto the market. So even though housing permits have been dropping for years as rates have been rising, since it takes so long to build, we haven't actually felt that decrease in inventory yet. So you can expect less and less new housing options to choose from moving forward, but the bigger issue here is the unemployment risk. I've talked about this a lot in past videos, but many times a leading indicator that a job loss recession is coming starts with mass layoffs, specifically in the new construction housing sector. So when builders are no longer able to sell houses, they stop building houses and they have layoffs of all of their construction workers. That's usually the first domino to fall in a job loss recession. And so far, even with less and less new permits being pulled, this hasn't happened because there's been that big backlog of all these permits that you see here on this chart. But now that that inventory is being completed, builders are going to have less and less new housing starts happening, which means if they don't get some confidence soon in the form of lower mortgage rates, it's not unreasonable to think the layoffs will start because they're not pulling enough permits to hire all the people they've been hiring. Now, nothing has broken yet, but if the Fed waits too long to cut rates and these builders don't start increasing their new housing starts, these builders are going to have to start laying workers off. But even worse than this is if these builders actually do slow down their production and lay off a bunch of workers, then when the Fed finally does cut rates and housing demand comes into the market, we're not going to have enough inventory to keep prices from going up again. So you cannot have builders reducing future inventory and then cutting rates, or prices are going to go through the roof. And also, if they wait to cut rates until these builders have laid off their workers and stopped construction, it's not like they can just flip a switch and then suddenly they'll have enough houses to meet demand. Getting that whole machine up and running takes a lot of time. Building houses takes time. So, in my opinion, all we need for this to be okay is for rates to get down and stay closer to 6%. 6% rates will give the builders the confidence to continue building and creating enough supply for the demand that will come in the future. So we need builders to keep building to keep prices from going up quickly. Okay, so here's what we see in the reports. Overall building permits, that is apartments plus single family housing, were down 2.9% from last month and 5.7% from a year ago. Then looking at the total actual housing starts, they're only down 0.5% from a month ago and about 0.7% from a year ago. So far, we're still building about as many houses. This is because of that backlog of permits that's going to run out. And if you pull specifically single-family homes out of that overall data, single-family starts actually increased 2.7% month over month. So we're still okay for now. It's the looking ahead that we're worried about. Then as far as housing completions, we're down 5.7% from last month and 14.6% from a year ago. And of course, those completions from a year ago started way before. So that's the data we got from this report. And then also, I have literally no idea what kind of content you guys want to see more of. Outside of this weekly update, what are some other things that you would like to see? Do you want to see neighborhood tours around the Dallas area, neighborhoods in the suburbs? Do you want to see certain price points? Do you want to see new community tours like the one I featured last week? Let me know what you want to see more of so I can make it. Okay, moving on, we're starting with national housing inventory. This week we had an increase of 7,024 homes for sale in the country. This drops us to just 33% more inventory than we had last year, whereas for the last several weeks, excluding last week, we've been around 37%. Last week we were at 34%, this week we're at 33%. So oddly, inventory went up, but percentage-wise compared to last year, we actually saw a small decline. So this gets us to 739,434 homes available for sale in the country. The same week last year, inventory was only at 554,350. So almost 200,000 more homes for sale than we had last year. And as you can see in these previous 2 years, inventory continued to climb until a couple more weeks from now, late October, early November. So we could see that again. The big difference is mortgage rates this year are not expected to continue climbing. Then for reference, the all-time inventory bottom in 2022, we only had 240,000 homes for sale in the country. The peak of last year, we had 570,000, and this same week in 2015, we had about 1.172 million homes for sale. So we're still in this weird middle ground, but we're definitely trending towards getting back to a normal market. Now let's look at new listings. This week we had 60,361 homes listed. We did have a decline this week, but that is totally expected. You can see we should just be following this trend down. I expect that's what we're going to do the rest of the year. But the good news is you can see the middle line, that's this year. Most of the year we were significantly below 2022. And now here at the end of the year, ever since rates dropped a bit, we've been getting more new listings every week than either of the previous 2 years. So that's great news. Even if we just continue trending down for the rest of the year, this is the best we've seen in years. The last thing I always want to share with you guys is that this means every single week you're going to have less and less new options to choose from. So even if inventory goes up, that's just because the houses you already don't want, that nobody else wants, are going to continue sitting on the market having price drops. So please do not pass on a good home this late into the year, because the odds of you finding a better one are going to be smaller and smaller every week as there are less new listings. Now looking at pending sales, you can see most of the year we were just slightly above last year, and then ever since rates dropped, we just started going sideways instead of down. And this week we had a big jump in pending sales, not just nationally but also locally, as you'll see here in a minute. And actually we're now up to 10.2% more homes under contract than last year. That is way more homes under contract. And then of course, officially for the first time, we have now more pending homes than we did in 2022 as well. So this is a big milestone for us getting back to a normal market. However, you also have to consider the context. In both of the previous 2 years, mortgage rates were way higher. In fact, this week last year, mortgage rates were at 8%. So right now they're 1.3% lower than they were this time last year. So it makes perfect sense that we have more pending sales than we did when rates were at 8%. And this week we have a total of 357,675 homes under contract. The last thing we cover nationally is the percentage of homes having price decreases. Every year is totally normal for a third of homes to take a price cut before selling. Looking at the national chart, we had a tiny decrease this week, if you can even see it, down to 39.51% homes having a price cut. Last year we got as high as 39.2, so we've just been hovering right above that. The year before we got as high as 43.2. And as you can see, the last 2 years, we normally would still be trending upwards for several more weeks. Instead, we've been going flat for months. And actually, this gap here to 2022, we're actually 3.5% lower. So this number is probably going to continue sideways. Even if it would have gone up for several more weeks, that would have been totally normal. Okay, now we're looking at mortgage rates. Monday, I guess, was a holiday. That's why there were so few people in the office. Well, we started out at a 6.62, went straight up to a 6.68, and that's where we ended. And this week, it looks like we're gonna go even higher. And here is my evidence as to why we're going higher today, unfortunately. So you can see right here, we closed Thursday, down here we closed Friday, and both of those ended up at a 6.68. It's Monday, and we had a gap up, and we are continuing to charge straight up. And I would guess, actually, this is probably a reasonable place to stop. Which this is a big jump. This would be about 0.1% higher mortgage rates today. So I would not be surprised to see 6.78% mortgage rates today. But here's something that I noticed that I mentioned in the intro that I wanted to show you guys. This week, the last 2 years has been the highest the 10-year treasury, and so mortgage rates have been. Watch this. So right here, we are October 21st, okay? October 21st of 24. If we zoom way out, October 21st, let's go see what this peak way up here was. October 19th, October 20th, 24th. So this whole range is the current week that we're in last year. And last year, this was the very peak. And then after that, look what happened to rates. They came down pretty hard until January. So let's go back the year before. What's this peak? That is October 24th, October 21st actually. So the previous 2 years, we had a run up into October and then we cooled off into December, January. So I'm not 100% sure that that's gonna happen again, but it's happened the last 2 years, which would mean here we're gonna be up and then we're gonna trend down through January. That would line up with these supposed Fed rate cuts coming. So fear not, I don't think rates are going to go much higher than wherever they land this week, and then I think they're going to trend down all the way through January. Now looking at mortgage purchase applications, this week we saw a huge drop. Look how big that is. A 7% decrease from last week. That's what happened. Obviously we still have more than we did last year, but that is a big drop. After all of these weeks of growth with rates dropping, rates go up, and the number of people applying for mortgages falls off a cliff. But I've been saying it all year, and I still believe this and will continue believing it. There's no reason to believe mortgage demand is going to grow with rates this high, not until they get below 6% for a sustained period of time. That's when the real buyer demand is going to come in. The evidence I have for that is that's what home builders have been offering this whole time, and they're still selling just fine. So I know there is demand below 6% rates. Okay, now moving on to the local market data, starting with the MLS data of Dallas County. We had 525 new listings last week. That's 62 less than last week. 259 closings, that's 11 more than last week. Of the homes that closed, 44 were immediate sales, meaning they contracted within the first week. That's 6 more than last week. 269 went under contract. That's 35 less than last week. In total, there are 2,119 homes either under contract or pending. That's 20 less than last week. Moving on to Collin County, we had 377 new listings. That's 55 less than last week. 191 closings, that's 31 less than last week. Of the homes closed, 31 were immediate sales, 4 more than last week. 180 went under contract, that's 3 less than last week. In total, there are 1,859 homes either under contract or in pending status. That's 18 more than last week. Okay, moving on to the Market Action Index of Dallas County. If you've never seen this, it just takes into account all this data, puts it into one easy to read graphic with a number. Anything a 30 or below is a buyer's market. Above that, we're asking how much of a seller's market are we in. And also, if you guys want the Market Action Index for your specific city or zip code, I'm gonna try to remember to put the link down in the description, but you can just click on this and you can go search your own zip code or city and you can subscribe right here. And you can get this every week to see what's happening in your actual zip code. So this is something that I pay for that you can take advantage of. But all we're using this for is we're trying to see, are things looking normal or are they looking weird? So far, everything's looking totally normal. We're at a 38 slight seller's advantage. We've basically stalled out here at the bottom. What's normal is we should be trending down, but going sideways given that rates dropped the way that they did is totally normal. Median list price remains pretty flat. Same, median price of new listings flat from last week. Average days on market went up 2. Median days remains at 56. Number of homes having a price decrease jumped a little. It's the highest we've been so far, 47.37%. Inventory saw an increase of 22. So everything's normal. What we should be seeing is the market should be cooling off through the rest of the year. Let's check out Collin County. Collin County as well. pretty flat there. I mean, a tiny drop on the median list price, but the median price of new listings actually saw an increase. They were 36, slight seller's advantage. Their average days on market went up 1. Their median remained 63. Their number of homes having price decreases has been declining. They're at 52, although they got much higher initially compared to Dallas. So Dallas is going up, but it's still a much lower number. And their inventory has been crazy flat for many months now. And of course, their market action index just still pretty much flat, about a 36 slight seller's advantage. Now we're looking at pending sales. Look at Dallas County. We went from 1784 to 1858. That's a huge jump at a time where, as you can see, the previous 2 years, we should be heading down. So that's very unusual to see. And then looking at Collin County, same thing. Collin County is actually higher, let's see, 1682. We're higher than we were back in August. We're higher than all of this. When was the last time we were 1682? Right here. Since June 7th. That's the last time we were near this number. So in the summer, we have as many pending sales today in Collin County as we did in the summer. That is unusual. But I'll tell you what, Collin County has a ton of new construction and they're offering very low rates, well below 6%. All right, moving on. Now we're looking at the hottest and coolest cities and zip codes in all of Dallas and Collin counties. These are ranked using that market action index number. Starting with the absolute hottest cities, a super weird thing happened this week. Balch Springs, which I don't remember the last time they were even on the list, they jumped from not even making the top 10 last week all the way to the #1 spot in a single week. So last week they were at 39.46 and they jumped all the way to a 44.37. So I don't know what's going on, but people are buying in Balch Springs. That means Carrollton, who's been #1 for many months, cools off to #2. Grand Prairie cools off 1. Lancaster cools off 1. Coppell heats up 2. Saxe cools off 2. Ferris cools off 2. Richardson heats up 2. Irving cools off 1. Louisville cools off 4 spots to make #10. And Garland went from #8 to completely off the hottest list this week. Then we like to zoom into the specific zip codes. Carrollton 75010 is the absolute hottest at a 47.81, followed by Allen 75013, Dallas 75244, Dallas 75234, Carrollton 75007, Irving 75061, Garland 75041, Balch Springs 75180, Dallas 75287, Plano 75023. So if you live in any of these zip codes, then you can get top dollar for your house. Now we're moving on to the coolest cities. Nowhere near as much change in the coolest cities. Wow, Blue Ridge is all the way down to a 22. That is very, very much a buyer's market. Remember, anything at 30 or below is a buyer's market. So actually, anything Anna and above, these are all buyer's markets. So the absolute coolest, Blue Ridge, followed by Sunnyvale, which cooled off 1. Leonard heated up 1. Van Alstyne, Whitewright, Anna, Salina, and Prosper all remained in their spots. Wilmer jumps onto the list probably for the first time. I don't think I've ever seen Wilmer at #9. And then Rockwall actually heats up 1 spot, becoming the hottest city on the coolest cities list. Then looking at the coolest zip codes, of course, Blue Ridge 75424 is the coolest, followed by Sunnyvale 75182, Dallas 75204, Leonard 75452, Van Alstyne 75495, Rockwall 75032, Whitewright 75491, Dallas 75220, Anna 75409, and Dallas 75212. And all of these zip codes, again, these are all buyers markets below a 30. As always, if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. All that is in the description below. Thank you for watching. I'll see you in the next video.